On August 25 at 9 a.m., China's largest publicly listed property developer, Evergrande, was officially delisted after more than 18 months of suspension, ending its 16 years on the market. At its peak, Evergrande's market value exceeded 50 billion US dollars, and founder Xu Jiayin topped Forbes Asia Rich List in 2017. Evergrande's growth was built on massive debt of around 330 billion US dollars, earning it the title of the world's most indebted developer. It was once known as the dividend king of Hong Kong stocks. Between 2016 and 2020, the company paid out more than 70 billion Hong Kong dollars in dividends. Evergrande's suspension in January 2024 was compared to a patient in intensive care. Regulators eventually moved to liquidate the company, signaling concerns that its accounts were unclear, its promises unreliable, and its shares untradeable. Looking at past cases, when Luckin Coffee was delisted in 2020 for financial fraud, its market value dropped by more than 90%. Evergrande's share price fell to 0.16 Hong Kong dollars before delisting, down from a peak of 28 Hong Kong dollars, a decline of 99.9%. More than 50 billion US dollars in value disappeared, leaving many investors with total losses. The crisis began in 2020 when Beijing introduced limits on borrowing by large developers. Evergrande was forced to sell properties at deep discounts to maintain cash flow. Soon after, it defaulted on some overseas debt, raising concerns of a looming collapse. At the time, Evergrande insisted it was too big to fail and claimed it would never default. Following years of legal disputes, the Hong Kong High Court ordered Evergrande into liquidation in January 2024. The company began a long process of selling assets to repay creditors. Evergrande's debt portfolio includes domestic bank loans, trust financing, bonds, unpaid commercial bills, and offshore dollar-denominated debt. According to its financial report, by June 30th, 2023, Evergrande's total liability stood at 2.4 trillion yuan, while total assets were only 1.7 trillion yuan. Its debt-to-asset ratio had risen above 133%, showing that even a full liquidation would not cover its obligations. In January 2024, the Hong Kong court appointed Alvarez and Marcel as Evergrande's liquidator. The firm's role is to sell assets and repay creditors before formally dissolving the company. According to liquidators' disclosure, by the end of July this year, they had received 187 debt claims, and the total debt has surged to 319.9 billion Hong Kong dollars, over 40 billion US dollars. This was almost 100 billion Hong Kong dollars higher than the liabilities disclosed in Evergrande's 2022 financial report, and the number continues to grow as more creditors file claims. But how much money can Evergrande actually recover? Over the past 20 months, the liquidators have taken control of over 100 of Evergrande's subsidiaries and total assets valued at around 27 billion Hong Kong dollars, 3.5 billion US dollars. But only 255 million US dollars have been realized. And after accounting for claims from subsidiaries and complicated debt structures, only 167 million US dollars has flowed back to Evergrande. Of this recovered amount, more than 95% came from subsidiaries such as Evergrande Property Services and Evergrande New Energy Auto. The parent company's recovery amount was just about 80 million yuan. The scale and speed of these recoveries are minimal compared to Evergrande's massive debt, leading the liquidators to spend much of the past year in constant litigation. In March 2024, the liquidator filed a case with the Hong Kong High Court against PwC, alleging the auditor failed to detect inflated revenue of 560 billion Hong Kong dollars between 2009 and 2020. PwC, Evergrande's auditor for 14 consecutive years, received annual fees of 42 million Hong Kong dollars, but did not flag irregularities. Two consulting firms that prepared valuation reports for Evergrande in 2018 were also sued. In addition, 7 former executives and related parties, including founder Xu Jiayin, his ex-wife Ding Yumei, and former CEO Xia Haijun, were accused of deliberate financial fraud and asset transfers. Xu Jiayin and Ding Yumei allegedly moved more than 42.7 billion Hong Kong dollars through a technical divorce. Xia Haijun transferred over 24 million US dollars to the United States. The liquidator is seeking to recover 6 billion US dollars in dividends and salaries from these individuals. In July 2024, courts in Hong Kong and London issued global asset freeze orders against Ding Yumei, covering assets worth about 60 billion Hong Kong dollars, 7.7 billion US dollars, including luxury properties in London, bank deposits, and real estates in Vancouver. She was allowed to withdraw up to £20,000 per month for living expenses. Recently, assets worth 30 million US dollars belonging to Xia Haijun's wife, including 3 luxury homes, 4 high-end cars, and cash holdings were also frozen. Even if these funds are recovered, it will still be a small fraction of what is owed. Estimates suggest that the recovery rate of unsecured overseas creditors may only range from 2 to 9%. It's important to note that Evergrande's 2023 financial report listed assets of 1.7 trillion yuan, but the liquidators have only managed to recover less than 100 million yuan from the company itself, less than 1/10,000th of its total debt. While Evergrande's debt exceeds 2 trillion yuan, the liquidators have received claims amounting to only 300 billion Hong Kong dollars. The majority of creditors have chosen to pursue claims under Chinese law, which includes freezing Evergrande's assets in China and using court orders to seize them. Since the legal systems in mainland China and Hong Kong are not aligned, the assets already controlled by mainland Chinese courts cannot be liquidated by Hong Kong's liquidators. Therefore, the holes visible in the liquidators' reports are just the tip of the iceberg. The real debts lie beneath the surface, primarily in the form of unfinished housing projects. Industry experts have revealed that Evergrande still has around 700,000 unfinished homes with a funding gap of about 300 billion yuan. Completing these projects is proving difficult. Many small suppliers who provided materials and services are still waiting for payment, and some are on the brink of bankruptcy, leaving workers without jobs and struggling to survive. Despite government efforts to help complete the projects through special loans and relief funds, there's concerns that work resumption might slow down now that Evergrande has lost access to capital markets. Evergrande's delisting isn't just the end of one company. It signals a wider impact. The company has lost its access to capital markets, its financial channels are closed, and its brand reputation is severely damaged. Consumers who once trusted the brand now have much less confidence, making it harder to sell properties or expand operations. According to Gary Ng, an economist at French bank Natixis, Evergrande's delisting is largely symbolic but marks the end of China's real estate industry's golden era. During the COVID-19 pandemic, China's zero-COVID policy severely impacted the economy. After the policy ended, recovery was slow, with falling consumer confidence, oversupply, and rising debt slowing the real estate market's rebound. The sector, already struggling for years, continues to drag down the broader economy. Real estate once made up a third of China's economy and was a major source of revenue for local governments. Despite ongoing efforts to revive the sector, success has been limited. Chief Investment Officer of OP Capital, Cai Jingchang, says it's tough to boost consumer demand when people have little money to spend. China now faces multiple challenges, including tariffs from the US, high local government debt, weak consumption, unemployment, and an aging population. Analysts point out that the slowdown in real estate is a major factor holding back economic recovery. Economist Xie Guozhong, who has long warned about China's real estate bubble, said the bubble peaked in 2021 and has been shrinking since. New housing sales have halved over the last 4 years, with prices dropping by 50% in smaller cities and suburban areas. In first-tier cities, prices have fallen by as much as 30%. Goldman Sachs warned in June that China's property prices would keep falling until 2027. However, Alicia Garcia Herrero from Natixis said there is no real light at the end of the tunnel. Since the 2021 financial crisis, Hong Kong courts have issued liquidation orders for 6 major Chinese developers. Evergrande's liquidation is the most complicated case and serves as a reference for others in similar situations. On August 11th, the Hong Kong High Court ordered the liquidation of China's South City Holdings, marking the largest property developer liquidation in China since Evergrande. Meanwhile, Country Garden is still negotiating with creditors over its $14 billion in overseas debt. After several delays, the next liquidation hearing in Hong Kong is set for January 2026. According to data from the China Index Academy, defaults by real estate companies started in 2020. In 2021, the number of defaults jumped to 16 companies, then surged to 44 in 2022. By August 2025, 77 companies had defaulted. Since 2022, 30 property developers have been delisted. By August 2025, 20 companies undergoing debt restructuring had approval totaling over 1.2 trillion yuan in debt. Evergrande's delisting signals more than just the collapse of China's real estate sector. It also brings another major issue to the forefront: banking. On August 25, the same day Evergrande was delisted, Shengjing Bank, which had deep ties to Evergrande, announced its own plan to delist. According to Shengjing Bank's announcement, its major shareholder, Shengjing Financial Holdings Group, launched a cash offer to purchase the remaining H shares and domestic shares of the bank. The offer price for H shares is 1.32 Hong Kong dollars per share, and for domestic shares, it is 1.2 yuan per share. The total cost of the acquisition is about 6.7 billion yuan, with almost 3 billion Hong Kong dollars spent on H shares and 3.9 billion yuan on domestic shares. After the acquisition, Shengjing Bank will apply for delisting according to stock exchange regulations. The bank explained that its Hong Kong listing had lost its purpose. Trading volumes has almost dried up, with daily trading volumes of H shares accounting for only 0.0025% of the issued shares over the past 90 days, causing liquidity to freeze and limiting the ability to raise capital. Plus, the bank's stock price has been low for an extended period. From early 2025 until suspension, the Hang Seng Index rose by 30% and the mainland Chinese bank index increased by 28.4%, but Shengjing Bank's stock price fell by 4.2%, diverging significantly from the market. Founded in September 1997 as Shenyang Commercial Bank and renamed Shengjing Bank in 2007, it listed on the Hong Kong Stock Exchange in December 2014. As the largest bank in northeast China, Shengjing Bank's assets surpassed 1 trillion yuan for the first time in 2019. However, its fate took a downturn as it became closely tied to Evergrande. In 2016, Evergrande quickly became Shengjing Bank's largest shareholder through several stock acquisitions. By 2019, Evergrande held 36.4% of the bank, gaining absolute control. Between 2018 and 2023, Evergrande sent several executives, including Qiu Fuhua, Xu Jiayin, and Pan Darong, into Shengjing Bank's core management team, infiltrating its corporate governance and credit decision-making processes. This series of moves effectively dismantled the bank's independence, with a large portion of its credit resources funneled into Evergrande's related enterprises. A mainland Chinese financial influencer described Shengjing Bank's relationship with Evergrande as a predatory battle driven by ruthless capital. Through collateralized loan and asset pledges, Evergrande transformed the bank into its ATM. Because of the lack of full disclosure on the financial dealings between Evergrande and Shengjing Bank, the full extent of the funds exchange remains unclear and hard to calculate. Starting in 2020, as Chinese government policies tightened, Evergrande fell into crisis, and Shengjing Bank's performance deteriorated sharply. Both revenue and net profit plummeted, and asset quality came under immense pressure. As a result of its association with Evergrande, Shengjing Bank faced unprecedented difficulties, with its net interest margin approaching regulatory limits. In 2024, Shengjing Bank's operating income was 8.6 billion yuan, down 14.6% from the previous year, and its net profit attributable to shareholders was 620 million yuan, down 15.2%. This marked the second consecutive year of both revenue and profit declines for the bank. Compared to its peak in 2019, Shengjing Bank's 2024 operating income was less than half of its 2019 figure of 21 billion yuan, with net profit only about 1/9 of the 5.4 billion yuan recorded that year. In 2024, Shengjing Bank's net interest income was less than 6.9 billion yuan, a 22.3% drop from the previous year, and almost 100 billion yuan less than the 16.4 billion yuan peak in 2019. Over the past 5 years, the bank's net interest income has shrunk by about 58%. At the same time, Shengjing Bank's corporate and retail banking revenues also declined. Corporate banking generated 5 billion yuan in revenue, down 27% from the previous year, with retail banking brought in 2.5 billion yuan, down 10% year on year. The quality of personal loan assets has also worsened. By the end of 2024, the bank's non-performing loans in the personal loan sector had reached 2.9%, with mortgage loans at a non-performing rate of 3.7%. As Evergrande was facing a debt crisis, it sold 1.8 billion non-tradable domestic shares to Shengjing Financial Holdings for 5.7 yuan per share, a total of 10 billion yuan. However, Evergrande failed to repay its loans, and almost 1.3 billion shares pledged as collateral were seized and publicly auctioned in September 2022, ultimately taken over by a state-owned enterprise under SASAC. Financial blogger Hu noted that at the height of Evergrande's success, founder Xu Jiayin not only secured deals with banks like Jiangsu Bank and Shenzhen Development Bank, but also became the largest shareholder of Shengjing Bank, the biggest bank in northeast China. Shengjing Bank became Evergrande's financial ATM. As Evergrande collapsed, Shengjing Bank was dragged into bankruptcy. Hu added that Shengjing Bank must now bear the consequences of its partnership with Evergrande, and its exit from the market is inevitable. He predicted that soon, authorities in Liaoning province or other local judicial bodies might issue an announcement about a major corruption case involving Shengjing Bank, signaling that the delisting is tied to potential accountability for leaders or individuals involved. Shengjing Bank's delisting is not an isolated case. In fact, a delisting wave among Hong Kong-listed banks from northeast China has quietly begun. 2 other banks from the region have already delisted or are in the process, and 3 of the 4 listed banks from northeast China have either delisted or are in the process of doing so, reflecting the severe challenges for regional banks listed on the stock exchange. On April 15, 2024, Jingzhou Bank became the first Chinese bank to delist from the Hong Kong Stock Exchange. On July 3, 2025, Jilin Zhoutai Rural Commercial Bank announced a cash offer from Jilin Financial Holding Group to acquire all of its issued H shares and domestic shares. Reports indicate Jilin Zhoutai Rural Commercial Bank is expected to report a net loss of 1.7 to 1.9 billion yuan in 2024. Analysts suggest that the Chinese government once believed Evergrande was too big to fail and made several efforts to save it. They knew that if Evergrande collapsed, it would not just be a face-saving issue. It would trigger a banking crisis that would follow closely behind. However, as expected, the banking sector drained by the real estate crisis is showing signs of a series of failures. In China, where there is little social safety net, bank deposits are the only lifeline for the public. If incidents like the Henan Bank scandal, where customers' deposits disappeared, occur on a larger scale, desperate Chinese citizens could quickly erode the legitimacy of the Communist Party.